Monday 30 September. Critical price points. This is the weekly chart. This is terminus. This fair value gap in here, it can fill up all the way down. I want to have a possibility to draw down. We left a small part open in the fair value gap of this one, but this is the terminus of the week. We have the weekly volume imbalance, and then weekly high is used as point of resistance. This is the daily chart with those points. Immediately you can see this is settlement price toggled on with the cluster of volume imbalance in here. We annotate the high, the low, and this is also a very important price point, is the daily order block, which is for today the low of the day. I hope to trade into this weekly for a volume imbalance today, but tomorrow I hope that we will do that. So this is the 4-hour chart, price points annotated in here. This is an important fair value gap with the order block, of course, in the AM session. This is the low of the AM session. That makes us go to the 50-minute chart with all of the price points of that. Then we have the new week opening gap. We have the low of that, the high of that, which is being used in here and continuously being engaged in here. Previous day fair value, first percentage fair value gap, and today's first percentage fair value gap is somewhere in here somewhere, this one. So then we have the entry model. This is the Asian session, 6 p.m., 7 p.m. Sell side, buy side. We take out buy side. We never inverse this. Instead, we leave sell side, relative equal lows. We drop higher. We take out buy side here. This is then the fair value gap that I want to see inverse. We finally inverse that. After that, we close below this initial buy side. We do that with speed. We draw back into that. We leave this portion open, and then we draw to a new week opening gap and take out sell side. Then we have the pre-market session at 7 a.m. There's nothing really interesting for me. We don't engineer any liquidity yet. Then at 7:30 some ish, we see here relative equal highs. We take out sell side in here. We draw up into that. We take out sell side again. Then we want to see if we keep going lower, and then have a form of engineered liquidity then in the AM session draw down, or draw down, take out this, draw up, and then draw down again. That could have happened, but instead we take out sell side at 8 p.m. We see that, okay, this is target now, relative equal highs, and we're probably gonna do the swing high. So leaving out relative equal lows in here. So this is a position where we can enter this order block in here, and then we don't want to see price come back in here again. So our stop loss, once we inverse this, our stop loss comes in here. If it comes back, then we are done. But we don't. We engineer sell side liquidity, and we have the Judas swing up. Then the moment we've all been waiting for, the AM session and part of the PM session and the lunch macro. And that is what it's going to be about today. So clean chart. This is the, well, as far as clean scope, this is the E-mini. This Nasdaq, I mean, this is the S&P 500. We see that before we trade the day, we see we have an SMT divergent, that this low is lower than this high from 8 p.m. and the 8 p.m. high is lower than this low, which is an indication that this is the Nasdaq is weaker now. So we focus on Nasdaq. In here we have the same thing. We see higher high and a lower low. So once we are opening, we want to see these relative equal highs being taken out by ES to then spool down, which is the reason why we go down to the ES. As you can see in here, the relative equal highs, they have never been engaged, which is here. This high, where my cursor is on, and this high are exactly the same. So that means that it's not being swept, it's not being taken, it's not being engaged. So this is that engineered liquidity in the ES. And in here, we see we don't draw down to the engineered liquidity taken in the pre-market. We do, however, do that on the Nasdaq, which is a very clean price action. In here, the reason why we consolidate in here is because, as you can see, in the ES, we try to take the buy side in here. We try to engage that. Instead, we inverse and we don't take that, which is a sign of weakness. Once we inverse this, we can possibly spool now for lower prices. We annotate 950 in here. We annotate 950 in here. We say, okay, in here we get in here. We consolidate a little bit, and then we see 950 in the ES. We inverse this with gaps. You can see we inverse it, but we never leave a gap. Yes, we leave a volume imbalance, but we never leave a fair value gap in here. In here, we finally inverse that, and which is a reason for us to draw down. This is the first point of entry. This is the first percent of fair value gap. Midnight open, we are respecting that, so the second point of entry. But the main point of entry that my interest is in is this fair value gap in here, and then we draw down to take out the pre-market. So this is what it's all about. We had a small opening range gap of 29 handles. And here is what I just mentioned. We don't take out the high on the ES, which is the reason for us to consolidate around this level. We can see that we are in between the weekly high and the daily volume imbalance high. We consolidate around that. Once we see that we are leaving this and we draw back into that, that's definitely a point where we want to short. Then we draw into the first percentage fair value gap. We see in here the bodies are respecting that. This I don't really trust that yet, so we draw down midpoint of that. We do that with an inefficient market. We draw up to fill out this inefficiency. We don't fill up the entire gap, so then we draw down. We draw up again to come back to the new weak opening gap, which is another point of opportunity to short, and then we short to take out the engineered liquidity from the pre-market session. After that, this becomes sell side, this becomes buy side. We see a low, high, lower, low, higher, high. This becomes the bullish breaker. At this point, we have an SMT, which means that the ES took out this low, which is an indication that we can now trust bullish momentum for this price run to take out buy side, possibly these relative equal highs for Nasdaq. Remember, we didn't take out the buy side on the ES. Instead, we leave relative equal highs, so which is a reason for us to draw up and take out the buy side in here. We do that in the same price delivery mechanism we have seen multiple times. Again, we do that at 12-ish before noon. We try to take this out. This is definitely where we take a partial. We long in this new week opening gap. We have to endure some drawdown, which we leave relative equal lows. Looks very, very clean. Then we finally take that out, take a partial. We make an SMT in here, which is a weakness for ES. Tips our hand. And then we draw down with speed, not really with speed as here, but a formal speed, because we have a consolidation in the 10:50-11 macro time, which is a reason for us to then expect some volatility in the lunch. We inverse this, we draw back up into that, we trade lower, we trade higher to the new week opening gap, we trade lower, we form liquidity, then we trade higher, and at this point now we are in the 150-210 macro, which once we draw down to this volume imbalance in here, within the combination of this fair value gap in combination of the new week opening gap, that's definitely a short to take out this low, relative equal lows in here, and eventually trade in the daily order block. So that's today. I can spoil that at the end of the day, after 3 p.m., we definitely take out the lunch relative equal highs, which for tomorrow is a very good indication that we could possibly go lower again. So that was today. How do I close this? Close this. Close.